Hey everyone, welcome back to Corporate Decoder, the place where we reveal the secrets hidden between the lines of corporate filings. And tonight, we are diving deep into Century Therapeutics Inc., a company that seems to be making some interesting moves in the biotech space. Before we dive in, if you love getting these clear and simple breakdowns of complex financial documents, make sure to hit that subscribe button and ring the bell. Also, we have a fantastic community over on Discord, all linked in the description, so come join the conversation. Alright, so Century Therapeutics Incorporated has just dropped an 8K filing, and this type of report is usually for big significant events. Think of it like a company hitting a major milestone or making a game-changing deal. And oh boy do we have a deal here. The date we are looking at here is the 7th of January 2026, and this is when Century Therapeutics Incorporated entered into what is called a securities purchase agreement. Now, what does that mean in plain English? It means they agreed to sell a whole bunch of their stock and warrants to some investors. This is essentially a private placement, a way for companies to raise money outside of the usual stock market channels. They are selling a lot of shares here, over 92 million shares of their common stock. And on top of that, they are also offering pre-funded warrants and common warrants to buy even more shares. The price point here is around $1.15 per S-share and accompanying warrant, which sounds pretty small. But when you are talking about tens of millions of shares, it adds up fast. The company is expecting to bring in approximately $135 million from this whole operation before they even take out costs like fees. That is a significant chunk of change, and they plan to use it to fund the development of their leading product candidate called CNTA-813. And for general company operations, this tells us their focus is heavily on advancing their research and bringing that new drug to market. So who helped them make this happen? Well, a few big names in investment banking Leerink Partners, TD Securities and Mizuho Securities acted as placement agents. Their job is to find these investors and structure the deal. Now, here is an interesting part of the deal. For a period after this private placement closes, the company has agreed not to issue any more stock or any securities that could be converted into stock. This is a common move to prevent diluting the value of the shares that were just sold and to give the company some breathing room. On that same day, the 7th of January, they also inked a registration rights agreement. This is basically a promise to the investors that the company will make it easier for them to sell their newly acquired shares down the road by filing the necessary paperwork with the SEC to register those shares for public resale. This is crucial for investors who want to eventually cash out their investment. And here is where it gets a little spicy. The registration rights agreement has some penalty clauses. If the company fails to get those shares registered properly and on time, they have to pay the investors penalties. These penalties are a percentage of the investor's investment for every 30-day period that the delay continues. This shows the investors are serious about getting their shares registered, and the company is taking on a commitment to get it done. It is important to note that this entire deal was done without registering the securities with the SEC upfront. They are relying on exemptions like Section C of the Securities Act, which is typical for private placements aimed at sophisticated investors. The underlying shares, when they are eventually issued, will also be under this exemption. Moving on to another section here, we see that on the 8th of January, the company actually put out a press release to announce this private placement. They also updated an investor presentation. These are often issued to give investors and the public a clearer picture of what is happening and show the excitement around these kinds of deals. This press release is Exhibit 99.1 and the investor presentation is Exhibit 99.2. These are important tools for the company to communicate their story and prospects to the market. Looking at the investor presentation, usually these slides really lay out the company's strategy, their pipeline, and why they believe they are a good investment. The fact that they are raising $135 million suggests they have ambitious plans for their lead candidate CNTA-813, and they need that capital to execute. Now let's zoom out and look at the broader picture for Century Therapeutics Incorporated. They are clearly in a growth phase needing significant capital to push their drug development forward. Raising $135 million is a substantial vote of confidence from the investors who participated in this private placement. It signals that these investors believe in the company's technology and its potential to bring a valuable therapeutic to market. However, there are always risks, especially in the biotech sector. Drug development is a long and expensive process with no guarantee of success. The company is betting heavily on CNT-813. If this candidate falters, it could significantly impact the company's future. The penalties described in the registration rights agreement also highlight the importance of timely execution on their part. Any significant delays in the registration process could lead to financial penalties and erode investor confidence. In conclusion, Century Therapeutics Incorporated is making a bold move to secure crucial funding to advance its pipeline. The private placement shows strong investor interest and provides the necessary capital for their development efforts. The key challenge for them now is to successfully navigate the complex and costly path of drug development and regulatory approval. They've got the money, but now they need to deliver on their promise. What do you think about this big funding round for Century? Therapeutics, could this be the fuel they need to succeed? Or is it a risky bet? Let us know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more corporate insights delivered straight to you. And don't forget to join our Discord community in the description. Thanks for watching, and we'll see you in the next one.